Hello and welcome to today's class. And today we're going to be talking about trends, support, and resistance. This is a very interesting and simple topic. All right. So, without no further ado, let's go straight into what we have for today. Now, what is a trend? Trend is simply price direction. Okay, it's simply the direction in which price is moving. Is price going up or down? If price is going up, now that is the direction. If price is going down, that's the direction. All right. So now there are three types of trend, namely the uptrend, the downtrend, and the sideways trend. Okay. Now, in the previous course, all right, we actually talked about training. I explained them more in depthly, but now we are kind of in a more advanced, um, we are kind of in a more advanced one. So we are not going to be dwelling on the theoretical aspect. We are going to be dwelling on the practical aspect. All right. So now it is safer to trade in the direction of the trend. All right. As a trader, you should have it in your mind that it is safer for you to trade in the direction of the trend. All right. Now, imagine you are swimming, okay, and then you get to swim against the wave of the water. It's going to be more difficult. Okay, let's assume the water is flowing to the right. Let me say it's a river. All right, and then you're standing and or you're in the water and the river is flowing to the left. Okay, now if you are swimming towards the direction the water is flowing in, then you will find it easier. But then if you want to swim against the direction of the water, all right, then you'll find it stressful. Now, as a trader, you should have it at the back of your mind that in most cases the trend is your friend. All right, so learn to trade in the direction of the trend. Now, support and resistance are proven areas where buyers and sellers find some of equilibrium. All right, so I'm talking about support and resistance. They are what? Proven areas, or you can say they are proven price levels where buyers and sellers find some of equilibrium. Now, they are major turning points in the market. For instance, let's assume you are in a you are okay. Let me just say, let's assume we have price going up, and then price gets to maybe a price level of 1,000, and then it just drops from that 1,000 price level. It means price has hit resistance. Okay, now let us assume, okay, that maybe in the physical market. Now let me use iPhones. Okay, for example, let me say an iPhone 11 was initially 300,000, and then it went up to 350,000, and then the moment iPhone 11 entered 400,000, it dropped massively back to 250,000. Now that 400,000 price level is a resistance. Okay, immediately price got to the level, it dropped. So that is a resistance. All right. Now, talking about support and resistance. Okay. Now, support and resistance levels are formed when price reverses and change direction, and price will often respect these support and resistance levels. In other words, they tend to contain price movement until, of course, price breaks through them. Okay. Now, so one thing you also need to learn is that price will keep on respecting support and resistance level until it breaks through them. So it means price can also break through support and resistance level. All right. So now, relating it to the example I gave about iPhones, it also means that the price of iPhone 11 can then skyrocket past 400,000. Maybe something happens. Maybe iPhone gets to just announce something, or the economy does something, and then the price of iPhone just goes up, poop. Or let's say, as in Nigeria, let's say the dollar rate increases. Okay, then you get to see the iPhone just go up, poop, 450,000. You get so price. So support and resistance level can be broken. All right, so let's go on now. Trending markets are simply characterized by a repeated pattern of higher highs and higher lows in an uptrend, and then lower highs and lower lows in a downtrend market. Okay, so in an uptrend market, an uptrend is made up of higher highs and higher lows. Okay, that is what you know. That is how you get to know an uptrend. An uptrend is made up of higher highs and higher lows. All right. Now, as you can see in the example above, the market is making series of higher highs and higher lows, which indicates that the market is uptrending. All right. Now you can see this is a high. If the market goes down and then it goes up again, it has formed a low. So you can see now this is a higher high, this is a higher low, higher high, higher low, higher high, higher low. Now I know that if you're a complete beginner, this might actually this might actually be starting to look weird to you. But believe me, over time, you're not even going to see this as a challenge anymore. Now, you do not need indicators to decide if it is a bullish or bearish market, all right? Just a visual observation of price action is quite enough to get an idea about the market trend. Okay? So now let's look at an example of a downtrend market, all right? Now, In a downtrend market, we said it is made up of lower highs and lower lows. Okay, you can see this is a lower low, a lower high. This is a lower low because this low is lower than the previous one, so it is a lower low. Now this high is lower than the previous high, so it is a lower high. That is simple, and that is how it is. Okay, so a downtrend is made up of lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay. Now, this example shows a bearish market. As you can see, there are a series of lower highs and lower lows which indicate an obvious downtrend. Trending markets are easy to identify. Don't try to complicate your analysis. Use your brain, use your eyes, and see what the market is doing. If it is doing series of higher highs and higher lows, it is simply an uptrend. Conversely, if it is making series of lower highs and lower lows, it is obviously a downtrend. As simple as that is. All right. So let's keep on going. This class is getting interesting. Now, how do you trade trending markets? All right, it's very simple to trade trading markets. Very, very simple, and one of the easiest strategies you can actually go for. All right. Now, if you can identify a trending market, it will be easy for you to trade it. Now, if it is a bullish market, you will look for a buying opportunity because you have to trade with the trend. And if the market is bearish, you have to look for a selling opportunity. But the question is, what is the right time to enter a trending market? That is it. That is a big question here now. What is the right time, or when is the right time to enter a trending market? Now, trending markets are characterized by two important moves. The first move is called the impulsive move, and the second move is called the retracement move. Now, in every trending market, both uptrend and downtrend, it is made up of two different moves. Now, the first is called the impulsive move, and the second one is called the retracement move. Now, in an uptrend, the move that goes up is called the impulsive. Now, settle down and listen to me. I want to explain slowly. So, get this. In an uptrend, it is called an uptrend because the market is going up. Now, in an uptrend, every sell, a sell here is a downward move. Now, every downward move we see in an uptrend is against the trend. Now, once the market is in an uptrend, every downward move is only a retracement before the uptrend will continue. Now, the retracement can also be called correction in some cases. All right, it's more like you're running a marathon. All right, and then you have to rest to gather enough energy, and then you continue running again. Now, let's assume you are running a marathon. You can run straight up for like 15 minutes, then you can take 5 minutes rest, you run for another 15 minutes, you take 5 minutes rest, you run for another 15 minutes. All right. So here in an uptrend, and let's assume the uptrend is a marathon. Now the market is going to keep buying for for example, 15 minutes, and then the market is going to take a break to rest, maybe for 5 minutes, and during that 5 minutes time or that 5 minute span is where you're going to see your retracement, maybe a little sell, and then after the rest, the buyers will continue the market, and the market is going to keep going up. Then you're going to see the buyers are going to be resting, the sellers to come in for few minutes, which is the retracement. Then you're going to have the buy impulsive move again, and so on. All right. So looking at the image on your screen, you can see this buy move is the impulsive move, and then this small sell move here is the retracement. This buy move impulsive, this small sell move here, the retracement. The buy move impulsive, this small sell, the retracement. The buy move impulsive, the small sell, the retracement, and then the impulsive move. All right. So let's keep on going. Let's look at an example on a downtrend. Okay. Now this illustration shows a downtrend market. As you can see, the best trading decision is to sell the market at the beginning of the impulsive move. If you try to sell in the retracement move, you will be trapped by professional traders and you will lose your trade. Now we know how to identify downtrends and uptrends and how to differentiate between an impulsive move and a retracement move. This is very important for you as a price action trader to know. But the most important question is how to identify the beginning of the impulsive move to enter the market in the right time with professional traders and avoid being trapped by the retracement move. Now, if you don't enter your trade when you are supposed to enter the trade, and then when are you supposed to enter the trade? You are supposed to enter at the beginning of what? An impulsive move. All right. I stated it earlier. I said the best time to sell in this situation now is to sell the market at the beginning of the impulsive move. All right. Now, if you go to sell during the retracement move, you will get stopped out by professional traders and you're going to lose your trade. Okay. So the best time to sell in a downtrend is at the beginning of an impulsive move, and the best time to buy in an uptrend is at the beginning of the impulsive move. All right. Now, I'm actually going to be showing you how you can actually what's it called? How you can actually catch the beginning of an impulsive move. All right. So let's keep on going, guys. Now, to predict the beginning of the impulsive move in the trading market, you have to master drawing support and resistance level. So, what are support and resistance levels and how to draw them on our charts? Now, this is what we're actually going to be seeing in the next slides. All right. So, in order for you to be able to catch the beginning of impulsive moves so you can actually trade them well, you have to understand the concept of support and resistance. Okay, so let's dive into support and resistance fully. Now, support and resistance are proven areas where buyers and sellers find some of equilibrium. They are major turning points in the market. I explained that earlier in the beginning of this video. All right. Now, support and resistance level are formed when price reverses and change direction, and price will often respect this support and resistance level. In other words, they tend to contain price movement until, of course, price breaks through them. All right. Now, in trading markets, support and resistances are formed from swing points. Take note of that. Take note of that. Write it in your book. In trading markets, support and resistance are formed from swing points. In an uptrend, the previous swing point acts as a support level, and in a downtrend, the old swing point acts as a what resistance level. Now, see the example on the left side of your screen. You might be asking, what is a swing point? You see this high? Swing points are simply higher highs and higher lows. Yes. So in an uptrend, I told you an uptrend is made up of higher highs and higher lows. So now this is an uptrend. So this happens to be our higher high, which is also a swing point, higher low, which is also a swing point, higher high, swing point, higher low, swing point. All right. Now, we said in a trending market, the support and resistances are gotten from swing points. So now this higher high that is a swing point is automatically a resistance. All right, because if you check, if you just highlight that zone and then price breaks through it and comes back, you'll most likely see price do what? Reverse from that level. Okay. Now continue the movement. This support, this low now engineers a move that broke previous high. Now price comes back, that previous high price level becomes a new support level. Same thing happened here. This high becomes a new word support level. Okay. After this video, we're going to have a live chat explanation, and you're going to understand better in the live chat explanation. So the illustration above shows how the previous swing point acts as a support level after the breakout. When the market makes the retracement move, it respects the previous swing point, which is also the support level, which will represent the beginning of another impulsive move. So basically, what does this mean? It means that you have to buy what? On the support level. Yes, that's what it tells you from here. If you're trying to catch the beginning of an impulsive move, which you anticipate to happen at the support level in a trending market, then it means you're looking to buy at somewhere around this region, guys. Around here, around here, around here. Now, as you can see, when the market tests the previous swing point, which is the support level, it goes up again. By drawing the support level in an uptrend market, we can predict when the next impulsive move will take place. All right. So I'm going to show you another example of a support level. Now, this is also a support level. Whenever I see price selling and then we have a massive retracement, that level, that zone is a support level, guys. That zone is a support level. Price was selling and then boom, price went up. This is a support level. This is support. All these are support zones. All right. Now let's go on. Let's go on. Now the illustration shows how the market will expect resistance levels. When price approach the previous swing point, which is resistance levels, the market makes an impulsive move. If you understand how price action acts in the trending market, you will predict with high accuracy when the next impulsive move will begin. Another way to catch the beginning of an impulsive move is by drawing trend lines. This is another technical analysis skill that you have to learn if you want to identify key linear support and resistance level. Let me explain to you first what do trend lines means. All right. Now, before I go on to explain what trend line means, okay, look at the image on your left. On the left side of the screen, guys. Now you can see this is a downtrending market. And we said in the downtrending market is made of lower highs and lower lows. Sorry. So we have this to be a lower low, lower high, lower low, lower high. So now, once you highlight the lower low, which are also swing points, okay, it gets to form a resistance later on. All right. So you can see price reversed from what? This resistance over here. Price reversed from this resistance over here. price reverse from this resistance over here. Okay, so basically now you can catch the beginning of the impulsive move on this downtrend by selling around the new formed resistance. Okay, now back to the trend line issue. Quite often when the market is on the move making new swing highs and lows, price will tend to expect a linear level which is identified as a trend line. Bullish markets will tend to create a linear support level, and bearish market will form a linear resistance. Okay, so that was a snippet on trend lines. But then for this class, we're only going to dwell on support and resistance, and then this is all we're going to be looking at now. We're going to have a live chat video soon. All right, where you're going to understand better about support and resistance, and then the real life application. Okay, so I want you to do something for me. All right, now go to your charts, okay, and draw support and resistance zones on three currency pairs. All right, you can decide to choose Euro USD, you can decide to choose GBP USD, USD card, any one of your choice. All right, choose three favorite currency pairs you are going to be trading in your forex career. All right, I want you to start choosing them now. Make sure that these three currency pairs are what you're going to be consistent with. I don't want to tell you what I trade. I don't want to influence your decision, but then I'm just going to tell you. Personally, I trade Euro USD, I trade XAU USD, and then I trade Nasdaq. All right. So now this is your assignment. Go to your charts and draw support and resistance zone on three currency pairs. Highlight 10 different support and 10 different resistance on each pair. So it means altogether you're having 30 different screenshots. All right. So make sure you do this assignment. If you don't do it, you're shooting yourself on the leg. Go to your charts and practice. All right. So I'm gonna leave you here for now. I wish you a happy learning. I wish you happy trading, and I'll see you in my next class. Bye.